Hello, hello, hello. I hope you guys are doing well. I hope you're doing really well. Today, I'm not going to be talking about a conspiracy. Today, I'm just going to be educating people. I plan on discussing insurance, which is what I do in my day job. So I'm going to go ahead and take a dab real quick, and then I'll come back and we will dive right back into it as always. Um, I'm very excited. I look forward to sharing what I have learned over the last few years in this industry with you guys. Of course, as always, when I need my inhaler, I can't find it. I just ran all over my house while having an asthma attack, trying to find my asthma inhaler. Jesus. So, I'm going to focus on home and auto today, okay? I do home and auto only now. I'm still licensed in life insurance, but the reason why we're not going to talk about life insurance too much today is because it's pretty cut and dry. If you want my honest take on life insurance, find yourself an independent agent or a broker. This just means somebody who represents a bunch of companies, right? Find an independent agent or a broker and let them run your numbers for you. That's really all you can do with life insurance. It's a one-stop shop. It's not much to it. But with home and auto insurance, dude, the sky's the limit. There's so much that's out there, and there's so much that you guys don't know. And I don't mean that in like a bad way, but there are genuinely a lot of things that you guys don't know about insurance. So I'm going to do a couple of things today. We're going to talk about some myths with home and auto insurance. We're also going to talk about some tips and tricks, how you can save, how you can avoid getting screwed over by the hard market. CNN posted an article about this, and spare me your nonsense, please. If you've got an opinion about CNN, that's fine. Fox News said some stuff about it too. If you hate Fox News, that's fine. Every major news industry has said something about insurance. Okay. CNN's article said the insurance industry has been the hardest hit industry of the last 47 years, meaning at no other time in the last 47 years has my personal industry been impacted more. That's through other pandemics. That's through the housing crisis collapse. That's through 9/11. That's through multiple wars. The COVID-19 pandemic screwed my industry horribly. And before I go into the myths and the tips and tricks, I'd like to expand on that. Most of your guys' agents are probably just saying, oh, it's inflation. That's why your rates are up. Yeah, that's not wrong. But there's more information out there that could be shared with the client and more importantly, shared with the viewer that would hopefully provide some peace of mind. For example, used cars, Kelly Blue Book, by the way, used cars are up 42% right now. New cars, there's not as much uniformity on it. Like, for example, new Kias and Hyundais are selling cheaper than they ever have because they've been getting stolen more than they ever have. So there's that. But on average, nationwide, worldwide, used cars are up about 20%. So it's not a hell of a lot, but there is still a shortage of parts and kits and inventory. And then you have the shops. My wife, as a service manager, she'd be the first one to tell you that finding good help is pretty hard right now. And that's not my words. That's the words of millions of tradesmen and tradeswomen everywhere in this country, right? We've got supply chain issues. We've got everything. Sadly, most people, they don't care when you tell them that when it comes to their insurance. But that is why your insurance rates are higher. Most car insurance is up probably 30% on average nationwide, company to company. Most homeowners insurance is anywhere between 20 and 40%, just depending on the carrier. I'm not going to be naming any companies. This isn't going to be an expose on insurance, okay? It's not. What this is going to be is an upfront, honest communication about why rates are high and some myths about why rates are high and some ways that you can get your rates down. Simply put, lumber, we all remember what happened during the middle of the pandemic. Lumber at one point soared to over 300% of what its original value is. That's gross, okay? That's since come down a lot. But this lumber and labor and materials are a huge reason. And then there's also catastrophic losses. We've had more catastrophic losses in the last 5 years, either due to climate change, due to the BLM protests, riots, January 6th with the Donald Trump situation. All of these things caused massive, I'm talking millions and billions of dollars worth of damage, okay? You've got hurricanes in Florida. You've got wildfires in not only California, but pretty much the whole West Coast now. Every year, trillions of dollars of damage is happening. And we can't do anything to stop it. So across the board, rates are up. And it sucks. I'm not going to sugarcoat that. It sucks. My own insurance just went up $50 a month. And my credit's better. My accidents and tickets just fell off. And I'm 25 now, which means your rate should go down. None of that occurred. So I'm feeling your pain. I'm feeling your frustration. Now, with that being said, I would like to talk about some of the myths about the insurance industry. Simply put, there's so many out there, but I didn't really feel the need to cover them until recently, because now out of nowhere, they started just coming in droves. Occasionally you'd get the, oh my God, is my red car going to cost more? No, it's not. I should charge you $5 for asking, but no. But now, dude, all of a sudden, now I'm getting all of these myths. People just perpetuating lies and he said, she said, oh, my friend of a friend said this. Well, your friend of a friend isn't even your friend. Let's keep it a buck, But anyways, people hear one thing and they run with it. And that's kind of the problem in this world. So I want to undo that a little bit, okay? So first of all, I'm going to talk about auto insurance. Auto insurance... I live in Washington, and 36% of Washington drivers are underinsured. Okay. A large reason of that is because of this myth right here. Myth number one, you only need minimum insurance. The only thing minimum insurance is going to do is keep the cops off your ass. I'm going to be so fucking honest. That is all it's going to do. Nowadays, state minimum insurance will not cover a Tesla bumper. Ask me how I know. I filed the claim. I've watched the client run out of funds. Okay. It's ridiculous. So nowadays in Washington, you have to have 25,000 per person, 50,000 per accident, 10,000 property damage. These are just generic numbers for the sake of role play and hypothetical. Every state and every country has different requirements. So if you're watching this in different places, take this all with a grain of salt. Okay. But that last number there is the one that's the most important. Property damage. In my state, you only have to carry $10,000. I am not kidding you. That is about the cost after lumber, after materials, after a rental car, after towing, after everything, right? That is about the cost start to finish to get a Tesla bumper replaced. If you have the one with all like the 4 sensors in it. I don't know all the gears and gizmos that go into it. Personally, my forte is like 90s Nissans, 80s Nissans, a couple of Mazdas, old Japanese cars I like. All of these new ones that are a fucking rocket ship, I don't know anything about. I swear to God, and when my wife edits this, she's probably going to laugh at me, but I swear to God, hand on a Bible, I have to have my wife manipulate the steering column when I'm driving her car because I don't know what half the buttons do. To come back to the more serious note, Tesla bumpers start to finish, from claim to claim, is about $10,000. You're going to max that out if you get in a fucking fender bender with one of these Teslas on the I-5, okay? Don't carry state minimum insurance. Please don't. It opens you up for the sake of getting a lawsuit. And furthermore, come closer, guys. This is very important. Closer. Closer. Having state minimum insurance is a rating factor. Meaning, the lower your limits are, the higher your rates can be charged by a prospective insurance company. Yes, you heard that correctly. If you think that, I'm going to skirt the system, I'm going to carry a low limit, pay less on my insurance, hell yeah. No, you're not. You're not at all. You are not at all. Last week, I rode a guy who has 6 cars and max limit of liability, which is $500,000 per person, $500,000 per accident, or $500,000 combined single limit. Anyway, he had the max limit of liability on 6 cars. He's paying less for insurance than I do for my 2 cars. Yeah, because he's got perfect credit and he's got max limits liability. His credit score is literally like an 829. Like, it's almost perfect. I just bought a house and my wife just bought a car and we just bought a nice mattress. So, of course, my credit score is in the 600s. I have high limits, but I don't have max limits. I actually have like just above the middle of the road policy. So I still get good coverage, but again, I'm kind of working on an income here. Don't really want to have the max coverage yet. So take that for what it is. If you have state minimum insurance, statistically, demographically, people who have state minimum insurance are the ones that cause the accident. Not only that, they're the ones that cause the big accidents. I cannot discriminate against you by race, ethnicity, creed, sexual orientation, religion, etc. The only thing I can discriminate against you for is your credit score, your age, and your driving habits, and your insurance score. Your insurance score is, of course, your prior insurance. Those are things that are legally discriminatable, and rightfully so, because that's what allows the good people out there to not pay high insurance, right? Because the people who have bad rates and bad credit, bad driving, DUI, etc., they're going to pay the increased premium because they're being discriminated against, rightfully so. Not all discrimination is bad, and I want that to be prefaced, okay? Discrimination is only bad if you act upon it and use it as a means to subjugate and put other people down. If you just use it as a business platform, okay, this guy's a risk and this guy's not, that's not a bad thing. The 18-year-old guy with a boosted Subaru probably is a risk for insurance compared to the 25-year-old single mother who drives a Toyota Prius, right? On paper, those things look better. They just do. So that's myth number one. Myth number two is the classic red car myth. Complete myth. I'll never ask you what color your car is, and I will never care. I really won't. You could have your car be gunmetal gray. It could be wrapped. It could be silver. It could be white. It could be red. Okay? It's a complete myth. It's a complete fallacy. But it started from the old wives' tale of red cars get pulled over more. Complete lie. Let's break it down, though. With insurance, there is a caveat. And I want to just want to big brain that shit with you guys real quick. So the red car myth is a complete myth. The truth is, the trim and model that you have of a car, the specific model, the specific trim, if you've got a premium, if you've got a limited, that whole thing, that makes a massive difference in rating factor. If I give you a base car versus the limited top of the line with the sunroof, right? This car is like literally way cheaper than that car is going to be, despite it being the same car on paper, okay? So that's something that you're going to want to take into consideration. The reason why I want to go with you is because the nicer cars, typically, not always, but typically, those higher trim models, those higher luxury line cars, they have the flashier colors. That's all it is. They have the flashier colors. You get what you pay for. And so when you have that car that's got all the bells, the whistles, it's probably got some nice flake in the paint, bada bing, bada boom. It doesn't make a difference. It really doesn't. Because God forbid that car is totaled or completely, or not completely destroyed, but you just have to get a paint correct. Dealerships get their paint at wholesale prices. We're genuinely not worried about the paint correction. We're just not. But when you have that Tesla bumper that's got 5 sensors in it versus the base model that only has 2, that's a huge difference, right, guys? I mean, this is something you want to think about. So that's myth number 2. Myth number 3 is my favorite one because I run into it a lot. Myth number 3 is men will always pay more for their car insurance. Used to be the case, but not so much now. Not so much now. Not so much now. Nowadays, credit is king. Nowadays, driver history is king. Nowadays, good grades for the young drivers. Good grades are king. If you have all of those things, you will pay less than your average woman who does not have those things. It has nothing to do with gender anymore. Also, we'll address the elephant in the room. We live in a more progressive society than we did 30, 40, 50 years ago. So nowadays, your overt gender, whether that's assigned at birth or your identified gender, nowadays, just the gender alone doesn't actually hold as much weight on your insurance premium. Nowadays, we're going to be looking more into, okay, how does this person drive? What does their credit score look like? What are their underlying limits? And do they have claims activity? If those 4 things are all positive answers, you will have low premiums every time. Doesn't matter if you're a boy or a girl, if you're a they, them, gay, bi, trans, does not matter. Does not matter at all. Who you are as a driver profile is what they're more looking for. Just simply put. Now, granted, I would still say, in my experience, I still see most boys, like, youthful drivers, most boys still pay way more than girls do. But if that boy's got good grades and he got licensed at 16, he went to driver's ed, he's going to pay just a regular young driver rate. He's not going to get dinged out the wazoo just because he's a boy. Doesn't typically happen unless he's got a speeding ticket. That's when he's going to get dinged through the wazoo. Okay. This is my most important one. My friend borrows my car and he crashes it. He's responsible for the physical damages to the car. Wrong. The registered owner of the vehicle is always in charge of the repairs, even if you entrust the vehicle to somebody else. Okay? Their insurance will cover their liability, what they are physically at fault for. Your personal insurance is responsible for carrying physical damage coverage. That's your comprehensive, that's your collision. As long as you have those on your car insurance and you trust John Doe to drive your vehicle, 9 times out of 10, you're going to be just fine. You won't have to worry about anything. But if you have a liability only policy and you're thinking about letting John Doe drive your car, probably shouldn't do that. I genuinely wouldn't recommend doing that unless you just genuinely don't care about that car and you don't mind if it's totaled. Because if it is, you're out. Sorry. Bottom line, don't loan your car out. It's not worth the insurance premium. All right. Transitioning over into property insurance, okay? Now, this one's specifically for homeowners. If you guys want to know more about renters insurance, I'll talk about that here at the end. But this is more for the homeowners insurance policies out there. Just because we just talked about it, renters insurance, guys, please get one. Please fucking get one. If you have kids, if you have a dog, if you have pets, if you have roommates, please, 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 please get a renter's policy just for the liability alone. It covers you for household claims, and it's very, very important. Okay? Most renters policies are literally $20 a month. I'm not exaggerating. If you struggle to find one, email me and I'll recommend you some good companies. Back over to the homeowners insurance. Homeowners insurance has a shit ton of myths because there's a lot of exclusions in what's covered and what's not. I'm just going to focus on like the main 5 here. The first one's huge. Homeowners insurance covers me for flood, covers me for earthquake, covers me for everything. Hell no, it doesn't. I should smack you with a newspaper. You are an idiot if you think that. Respectfully, of course. But it doesn't cover any of those things without reading your contract. And I always urge my clients to read that. There will always be exclusions on homeowners insurance. In fact, some companies have more exclusions on their policy than inclusions, meaning what's covered. I'm not fucking kidding you. You have companies out there that only insure against fire. What about theft? What about windstorm? What about hail? Right? That's scary. Flood and earthquake are the 2 most common exclusions. You're going to be pretty hard pressed to find a company that's going to provide those in-house. And that's just the way it is. Now, before you freak out, the reason that is the way it is because floods typically have a flood zone. And in those flood zones, there are usually carriers that are more well adapted to take control of that situation. They have better premiums. They're working with a smaller pool size. So because of that, they're able to offer a better package. Same thing with earthquake. There's a shit ton of companies out there that offer earthquake, such as Arrowhead Palomar and GeoVera. Those are the 2 big companies. But be advised, they have very high deductibles, typically 10 to 15% of the house. The house. Okay? Now, in Washington, we don't really live on a massive fault line. We have a couple small ones up in Seattle and in King County, but we don't typically run into a lot of earthquakes. Now, I will say there's a lot of reports that say we're overdue for at least a 6.0. And a 6.0, I'm not going to fearmonger you or anything. It's nothing crazy. But it would be, be one of these numbers. It'd get a little shaking going, and there'd probably be some stuff that falls off. That's for sure. But it wouldn't be a world ender by any stretch of the imagination. So, earthquake, flood, very commonly excluded. There's a couple of other ones that are common in there as well too. So what I always say is always read your contract or ask your agent. If you're nervous, ask your agent about open peril or all risk insurance policies. It's kind of in the name. They typically mean that they're going to cover everything up to what's listed as an excluded. And again, that's why I say read the contract. A lot of these contracts are going to tell you verbatim, I'll cover this, but I won't cover that. That is good. That's really good. Just read your contract, guys. It's about 70 pages, and I know that sucks, but read the damn thing. You need to. Number 2, big myth, big myth, big myth. Collectibles are always covered. This one's got some shakiness to it. To a degree, a lot of your collectibles will be covered under your homeowner's policy. However, theft always has a sublimit. And what a sublimit means is if the cause of loss is theft, they're only going to cover up to X amount of dollars. And that sucks, okay? Because typically when theft occurs, they're not just going to take one fucking thing. They're going to take you out for your whole loot. And so I always recommend my clients always list your valuables. Anything over $2,000 roughly, I'm going to want you to list that for sure. The reason why I say $2,000, a lot of companies are at or around that mark for their sublimit on theft. So if you've got art, if you've got electronics, if you've got firearms, if you've got family heirlooms, if you've got jewelry, please list all of those. Please list all of those. Ask your agent if there's anything that he thinks you should list and just go through it bit by bit. He will literally tell you, or she will tell you, or they will tell you exactly what's available and what should be listed and what is essentially just a waste of premium. Like, for example, I had a gal who called in about $1,000 ring. It wasn't an engagement ring. It was just $1,000 ring with a nice emerald in it. And I actually informed her, hey, under most clauses, this should be covered. You won't really need to pay the extra premium to insure it. And I even showed her. I was like, you'd be paying an extra $40 a year to insure something that's already covered. It's just a waste of premium. Save your money. I always recommend my clients talk to your agent. If you don't have an agent, get one. If you use your insurance online, it's no, please stop. That's why half the state is underinsured right now for their property insurance. 56%. Google it. My favorite one is this one. I got into an argument with a loan officer about this yesterday. Number 3 is, I should insure my home for the market value. Please don't. Please don't. The reason why I say that is because market value has nothing to do with rebuild cost. We insure your house to the replacement cost, which is paramount. What that means is if a hurricane or something comes down and smacks your house down to the freaking foundation, we're going to replace that. Not repair it. We are going to replace that down to the square footage, down to the same materials, etc., etc. When you buy a house using Zillow, Redfin, Realtor.com, using a real estate agent, wherever, when you buy a house, you're paying for things like land. You're paying for things like locale, the area that you're in. You're paying for things like the crime. Same thing with locale, crime rates, neighborhood. You're paying for things like amenities. Do you live in a gated community? Do you have your own park? Do you have an HOA? Do you have this? Do you have that? Right? You're paying for all of those things with the house. That has nothing to do with the replacement. That has nothing to do with it at all. And I'll be so honest, if you go up and look at places like Seattle, or you look at places like Los Angeles, or you look at places like Sacramento or New York City, places that have severely inflated home markets, guys, you could go up in Seattle right now and look at a 1,300 square foot Rambler, and it's going to sell for $1 million. Divide that, okay? Divide that. That comes out to like $800 a square foot if you're insuring the house for that much. That's no, that is so unnecessary. You're going to overinsure on accident in high valued neighborhoods, and you're going to underinsure out the wazoo in your rural areas that are 50 miles away from anything, and you're not paying for those amenities in locale, okay? So please don't ever insure your house for market value. I had to tell that lender too. I was like, hey, I get it. You have to protect your loan, which is, that's what the insurance is for, protecting the loan. However, if the house gets destroyed, we're replacing it. We're not cashing out the lender. So that lady was a silly goose, and she needs to get in the pond. Pure and simple. Last but not least, land. Yeah, we don't insure land. If the land gets burnt in a wildfire, guess what? It's still going to be there tomorrow. And I know that sounds just way off the cuff, but it's fucking true. We're not going to replace the land. It's going to be there. So Next thing. Always ensure a replacement cost. That's what it's called. Replacement cost. Fill out a replacement cost estimator with your agent. You'll thank me later. I love you. Next topic. Termites and mold are covered. It depends. This one is very often excluded as well. The reason why this one's often excluded is because they're going to argue that this is a maintenance issue. Genuinely. These are usually and accurately argued as maintenance issues, and there have been dozens of case law that sets precedent for this, sadly. A lot of people have sued their insurance companies for termites and mold, and they've lost those cases. The reason why these are argued as maintenance issues is because I'll be fucking blunt, dude. You can tell if a structure has mold in it pretty quickly, and if you can't, hire a contractor. Okay, with termites, it's pretty easy to let that go missing. Like you won't necessarily know unless you're an expert or you have an HVAC guy coming up underneath your house checking everything out. But those are going to be regularly excluded. Ask your agent. Always ask your agent. Okay. Number 5 is a big one. My homeowner's insurance covers injuries that happen in the home. This one's half true. It genuinely depends on who's injured. Most homeowners policies, you can opt in or out. I will only issue policies with at least a minimum, but you have a provision called medical payments. Medical payments sadly only covers non-household members. So you're looking at people that are not listed on the declarations page, husband and wife, and you're not looking at their kids. None of the household members will be covered, but all of their loved ones that visit them will. So if you guys have a huge family get together, you guys have a kickback, family reunion, and 3 people trip and fall and snap their ankles, all of those guys can claim it. But if your daughter Susie trips and falls and snaps her ankle, you're kind of SOL there. And that sucks. My dog is annoying me and she won't leave me be. Lay down. Good girl, yeah. Sorry, dad duty. Saturdays are dad and daughter days, which will be getting expanded soon. We found out we're having a daughter. I'm really excited. Okay, anyway, so to sum it up, homeowners insurance, you're not covering your household members. We will cover your guests. Okay, now, quick and simple. Let's go into some tips on how you can skirt this hard market. There's a lot that we can do, but I'm really just going to focus on the main ones. The first one, carry high limits of liability. On your home insurance, carry $500,000. On your auto insurance, carry a minimum of $100,000 per person, $300,000 per accident. Again, referencing the state of Washington. If you live in other states, I believe they carry similar packages, but they might tweak a tiny bit. You want to carry at least $100,000 in liability on your auto. Nowadays, I personally still think that that's a little bit underinsured, just in case you hit a second or third vehicle. But for your 2-car accident, this is going to be more than enough coverage, barring any crazy complication. High limits. That's advice number 1. Advice number 2, bundle everything, dude. Literally bundle everything. A lot of companies now will sell life insurance, so bundle your life insurance with them. On average, you're going to save 20 to 30% just doing that. And remember, earlier in this podcast, I just told you that most rate increases were about 20 to 30%, so always bundle. The next big thing I want to talk about is checking rates under the spouse's name. If you don't check rates under the spouse's name, you're doing yourself a disservice. Because like I told you about earlier, it was kind of a myth in assuming that men always pay more. I'll be honest. A lot of my men that I insure, just because of the way their household is set up, they have the better credit score. So because of that, they usually will have the better rate. And again, that's a household thing. So if wife's got the better credit score, run it under wife. If husband's got the better credit score, run it under husband. Simple as that. Always put it under the person who's got the best credit. And that brings me to my next point. Compile household insurance. Okay? If you guys all live together, always insure together. I've got a couple of clients who, and this is just role play, this isn't like a real scenario, but I've got one who might be with Allstate, and then I've got one who'll be with State Farm, and they're married together and they share each other's cars. Dude, just put the cars under one policy. You're going to get a multi-car discount. And then, like I was talking about earlier, you can check who's got the better credit score and get the best rate, squeeze every last drop. Okay? So always check into that. If you're not doing that, you're a silly goose. Get in the fucking pond. Get in the fucking pond. Good credit. Credit. If you don't have good credit, work on it. Work on it. I'm talking to myself right now. Real shit. Get your credit fixed. If you get your credit fixed, I've seen some people who have really changed their lives with their insurance by just working on their credit. And I'm not kidding you. I've got a person whose declaration page 10 years ago was the same price as what it is today, and he's got more cars and he's married just because his credit was shit 10 years ago, So work on your credit. That's huge. And I'm just going to double down on this. I mean, if you have a couple accidents and maybe even a ticket, that is not as important as having a good credit score. If you've got a good credit score, high limits, and you bundle, I frankly don't give a shit if you've got a couple tickets. I'm going to get you a good rate. I just am. Because everything else statistically says on average, you're going to be a better client to insure. You probably just got a couple of tickets in a small time frame, and that sucks. But that could be attributed bad luck. The rest of those things I discussed, though, are attributed to good behavior, right? Good credit means you got good behavior. Here's my biggest tip. Don't fucking shop every year. Sorry, there was so much vigor behind that. I didn't mean to. Let me tone that back a little bit. But please don't shop every year. Please don't shop every year. Now, insurance companies, on top of credit, on top of driver history, on top of the spouse's information and all of that crazy stuff, they're also looking at how frequently you shop around. Okay? So if you're that guy who shops every 6 months, you will pay more than the guy who's been with this company for 10 years and is just shopping now because we're in an inflated time and he wants to make sure his rates are good, right? That guy is going to pay way less insurance than the guy who shops every 6 months. And I see it fucking every day. Every day. I have clients who pay $6,000 a year for their state minimum insurance. And I have that one guy I was telling you about who's got $500,000 on 6 cars and he pays less than I do. Okay? Perfect credit, high limits, doesn't shop regularly. I just took him from his company that he was with for 25 years. Those 3 things I just discussed are going to save you more money than shopping around every fucking 6 months. Not only that, but doing that little circle shit, you're wasting your time, dude. Your time. And then my last and most important fucking tip for this whole podcast. Don't shop captive, shop independent. And what that means is there's 3 types of insurance companies or agencies in the world. There are captive agencies. These are your Allstates and your State Farms that only represent their one company. And they're really good. They're really, really experted on a very niche product. Then you have independent agents and you have brokers. They're very similar in that they represent multiple companies. Brokers typically adhere to the client directly, and agents typically adhere to the company, but both have to do right by both parties, if that makes sense. Typically, I would recommend shopping with an independent agent. And the reason why is because they have better built relationships with the companies that they insure, meaning they can typically offer you more exclusive products than just the broker can. And of course, this is not necessarily a rule. This is just my experience. So if yours is different, that is totally fine. But I've spent about a quarter of my life in this industry now, which is crazy to think about. But I do know a little bit. Independent agents typically have really good relationships with the companies that they represent, meaning they can throw you a really good bomb. Both guys, brokers and independent agents, represent dozens of companies. And they're going to shop for you, and they're going to verify that you have the best rate every time. I recommend shopping with one of those 2 guys. At the end of the day, it's literally just a mission statement. What do you, as the insured, what do you specifically value more? Do you want the broker who's got your back every single time, no matter what? Or do you want the agent who's got your back most of the time, but also make sure he's putting you with preferred carriers and not Joe Schmoes? At the end of the day, that comes down to you. If you just care about the lowest dollar, a broker might be your guy. But if you don't mind paying a little bit extra more or paying the same price as the broker, sometimes, a lot of times, but you get better coverage, independent agent might be your guy too. End of the day, both of them are better than the captive agent that only represents one company. We don't want that. We don't want the womp experience. So if you've got a captive company and you've been with that company for 5-10 years, get an independent agent. Hop on Google, get on your computer, type in independent agents in my area. Boom. If you've got a preferred company, independent agents that represent Progressive, first company I just thought of. So, right, independent agents that represent Progressive. Whoop! And it'll show up. It'll show up people that represent their products in your area, and you can call them right up, dude. Nowadays, because the COVID's pretty much over, a lot of these guys also have offices that you can go in, you can bring your policies, sit down, and go over them bit by bit. And guys, I really, really, really suggest doing that. I saved a client $2,000, okay? $2,000 last week just by going over his coverages bit by bit. And I flat out identified that he was paying for a driver in his household, his son, that had moved out 20 years ago. He'd been paying for him for 20 years, literally. It's horrible. I can't take that back, but I saved him money today. So always, always review. Always, always ask your agent. Always shop independent or with a brokerage. And guys, work on your credit and carry high limits. If you do all of those things, I promise you, you will have better rates. You really will. You really will. I've got clients with DUIs. I've got clients with recklesses. I've got clients with felonies. And I'll be as blunt as possible. They aren't necessarily my most expensive clients. My most expensive client is the 21-year-old with no credit score, didn't go to driver's ed, and he's got tickets and accidents with low limits. That's the guy who's got the shittiest rates. And I say this with love, but there's going to be at least 3 of you guys that watch this podcast that have state minimum insurance. So I'm talking to you here. I know we're all working with the means that we have. COVID fucking ruined everything. But if it's in your means, bite the bullet for 1 year and get higher limits and then shop with another carrier. Once you do that, your rates will be so much better. I promise you. But I'll be as blunt as possible. I've been podcasting here for about an hour. I'm going to get on my merry day, okay? I hope you guys have yourself a very, very good weekend. I'm excited. Mariners season starts officially in 5 days. 5 days. So I am just so over the moon, guys. I really am. But anyways, if you watch this whole thing, I'm very, very thankful for you guys. My link tree is posted or getting updated. So if you guys see some facelifts there, I appreciate you guys noticing me. But this is just a long-winded way of me saying I am very thankful for the support I've gotten so far. And next week, I will be back with another juicy podcast. This one was actually a fan-submitted one from my buddy Tanner. My buddy Tanner, he wanted me to talk about Pine Gap. And Pine Gap, guys, this one's fucking good. I'm going to be so honest. Pine Gap is Area 52. Yep. Pine Gap is Area 52, and the coolest part about it, guys, is it doesn't even take place in the United States. It takes place in Australia, and there's a Netflix show about it. You guys remember what I said on my last podcast? If they have to make a Hollywood feature film to disprove it, something about it might be right. Okay, so I had to do some research, though, because I actually didn't know about Area 52. I'm surprised. I learned something, which means I got to go learn a shit ton more. So I'm going to go take a dab. I'm going to go get this sent over to Mackie P, my beautiful wife, and get this podcast edited and uploaded. And then we will start with Pine Gap next Friday, or 2 Fridays from now, because this will be coming out in a week. Fuck off. Anyways, I love you. Please subscribe to my social medias, and I will be back with more content very, very soon. Thank you. Have a good one.